In trading, you've probably heard people talk about price action, supply and demand, or technical analysis, but very few trading models have changed the game the way the ICT 2022 model has. Traders around the world have spent years studying these concepts, and in 2022, ICT, the Inner Circle Trader, brought it all together into one simple yet incredibly powerful framework. Now, if you've tried to dive into ICT's teachings before, you know it can feel overwhelming. Dozens of videos, hours of content, and a mountain of terms that take time to click. That's why in this video, I'm going to break down the entire ICT 2022 model in one place. Every concept, every detail, and the exact way to put it together into an entry model you can understand and apply. This is the second part of our series where we simplify the most powerful ICT concepts and make them as easy as possible for you to digest. By the end of this video, you'll have a complete simplified map of how liquidity, market structure, and timing come together to give you precise trade setups. So grab a notebook, stay with me until the end, and let's go deep into this model step by step. And hey, if this kind of breakdown helps you and you want more videos like this, make sure to hit that subscribe button. It really means a lot to me, and together we're building the best trading family on YouTube. Now let's dive in. Every trading model has to start somewhere, and for ICT, everything begins with liquidity. Liquidity simply means orders, buy orders and sell orders that are sitting in the market waiting to be triggered. Big institutions and smart money don't just randomly buy or sell. They need liquidity to enter their massive positions. And where do they find it? Above highs and below lows. Let's make this clear with an example. Imagine prices moving up slowly, creating a series of higher lows and higher highs. Retail traders are watching this pattern, and many of them place their stop-loss orders just below those swing lows. Institutions notice. They know exactly where the herd is protecting their positions. And so before price truly moves in its intended direction, smart money often pushes the market down just enough to trigger those stops. That's what ICT calls a liquidity grab. Think about it like this. Retail traders are playing checkers, but institutions are playing chess. The stops we place become fuel for their real moves. And until you understand this concept, that the market hunts liquidity, you'll always feel like price is out to get you. Liquidity comes in two main forms: buy-side liquidity, which sits above highs, and sell-side liquidity, which sits below lows. The market constantly shifts between one pool of liquidity to the other, sweeping out weak hands and feeding institutional orders. This is why you'll often see price spike just beyond a high before reversing, or just beneath a low before rallying. It's not manipulation in the sense of unfair play, it's just how big money operates. Understanding liquidity is step one to mastering the ICT 2022 model. Now, once we understand liquidity, the next layer is market structure. Market structure is basically the language of price. It tells us whether the market is in an uptrend, downtrend, or ranging environment. But ICT goes deeper than just higher highs and lower lows. One of the most important ideas here is the market structure shift. Imagine prices trending down, making lower highs and lower lows. At some point, institutions decide they've accumulated enough positions and it's time to reverse. But they won't just turn the market around without leaving clues. A market structure shift is when price breaks above a prior swing high in a downtrend, signaling a possible reversal. This break is not random. It usually comes right after liquidity has been taken, stops are swept, traders are shaken out, and then the structure shifts in the opposite direction. That's your signal that something bigger is happening. Retail traders often mistake this as a breakout. They chase it blindly. But ICT traders know that this shift combined with liquidity grabs is the foundation of a setup. It tells you that the market is transitioning from one phase to another. Liquidity and structure are powerful, but they become even more precise when you add time. The ICT 2022 model heavily relies on the idea that markets move with time-based cycles. Not every hour of the day is equal. In fact, most of the best moves happen within very specific kill zones. For example, the New York kill zone, roughly between 8:30 a.m. and 11 a.m. Eastern Time, is when you'll often see massive moves in the dollar pairs and indices. Why? Because that's when the highest liquidity enters the market. Major institutions, banks, and traders are active, creating the perfect environment for setups. ICT teaches that if you want to trade with consistency, you must focus on these windows. Otherwise, you're forcing trades in dead liquidity hours and you'll end up overtrading. Think of time as the filter. Liquidity tells you where the market is likely to go. Structure tells you the direction, and time tells you when it's most likely to happen. Another tool in this model is SMT, or smart money technique with divergence. SMT is about looking at correlated pairs or indices and spotting when they disagree. For example, if the euro and the pound usually move together, but suddenly one makes a higher high while the other doesn't, that divergence can reveal where smart money is actually positioned. It's like having an X-ray vision into the market. When combined with liquidity and structure, SMT gives an added layer of confirmation. Now comes the heart of the ICT 2022 model, the entry technique. Here's how it ties together. Imagine price sweeps a prior high during the New York kill zone. That's liquidity taken. Then you see a sharp market structure shift in the opposite direction. At this moment, something big just happened. Stops were cleared, institutions entered positions, and the market is showing its hand. Now you wait for the retracement. Price often pulls back into a fair value gap, an imbalance where buyers or sellers were so aggressive that price never traded evenly. These fair value gaps act as magnets, and when price returns to them, that's your opportunity to enter. So the entry checklist looks like this: liquidity sweep, market structure shift, fair value gap return, entry during the kill zone. That's the ICT 2022 entry model in its simplest form. Imagine price sweeps the high of the London session during New York open, shifts market structure downward and pulls back into a fair value gap. That's where you sell. Place your stop above the liquidity sweep and target the next pool of sell side liquidity. It's simple, but when you put all the pieces together, it's incredibly powerful. So there you have it, the ICT 2022 model, 41 episodes of content simplified into one complete framework, from liquidity to market structure, from timing to SMT, and finally the entry model itself. This isn't just theory. This is a complete trading blueprint that institutions have been using for decades, and now you have the map to start seeing it for yourself. If you found value in this breakdown, do me a favor, hit that subscribe button. It really means a lot to me, and together we're building the strongest trading family on YouTube. Share this video with another trader who needs clarity, and let's keep growing together. Thanks for watching, and I'll see you in the next one.